You know that feeling when you open your brokerage app for the third time today, only to see your portfolio is down 2%? Your heart starts racing, your palms get a little sweaty, and your finger hovers over that sell button. You tell yourself you are just being responsible, that you are protecting your hard-earned money from a further drop. But here is the truth that almost no one in the financial world wants you to hear. That very anxiety, that constant need to check and adjust, is likely the single biggest threat to your wealth. In this year of 2026, we are surrounded by more data, faster artificial intelligence tools, and more expert opinions than ever before in human history. Yet, despite all this advanced technology, the average investor is performing significantly worse than they did 30 years ago, when we were still reading stock quotes in the newspaper. Imagine having a $400,000 retirement account and realizing that by being smart and making adjustments, you have underperformed someone who literally forgot their password by over $70,000. This is not a theory or a guess. It is a statistical reality happening to millions of people right now. The most active investors, the ones who read every headline, watch every AI market prediction, and rebalance their accounts every month, are being destroyed by the people who set up their accounts decades ago and simply walked away. But before we dive deep into why your own intelligence might be your worst enemy in the markets, please take a moment to hit the like button and subscribe to this channel. Your support helps us share these hidden truths with more people who are tired of the constant stress and the noise of the modern markets. Also, leave a comment below with the phrase, "I choose peace of mind," if you are ready to stop letting the daily charts control your emotions and your future. Now, to understand why doing nothing is so powerful, we have to look at a story from the late 1990s that still haunts Wall Street today. Let me tell you about a firm called Long-Term Capital Management. This was not just any hedge fund. It was run by two Nobel Prize winners in economics and a former vice chairman of the Federal Reserve. These were the smartest men in any room, using complex mathematical models and supercomputers to find tiny, guaranteed advantages in the bond market. They were making 40% returns every year, and everyone on Wall Street was desperate to be just like them. They believed that more data, more intelligence, and more activity meant less risk. But in 1998, Russia defaulted on its debt, and the markets did something their models said was statistically impossible. In just 4 months, these geniuses lost $4.6 billion and nearly crashed the entire global financial system. The Federal Reserve had to organize a massive bailout just to keep the world economy from collapsing. While these Nobel winners were losing everything they had built, a school teacher in a small town who put $10,000 into a simple index fund and forgot about it made 12% that year. She did not know what arbitrage meant. She did not have a supercomputer, and she certainly did not check her account every day to see if she was winning. She outperformed the smartest minds on the planet by simply being too busy with her actual life to notice the crisis. So why do we struggle to do what she did? Why do we feel this burning need to interfere with our investments every time there is a news alert or a notification on our phone? The answer lies deep within our biology and the way the modern financial industry is designed to farm us for transaction fees. Think about the apps on your phone right now. They're designed by psychologists to be addictive, using bright red and green colors, real-time price updates, and push notifications that create a false sense of urgency. They want you to feel like investing is a high-stakes video game that requires your constant engagement and attention. Why? Because every time you click that trade button, someone else is making money while you are taking on more risk. Whether the market goes up or down, your broker and the financial media profit from your activity. Last year alone, these firms collected billions of dollars in fees, regardless of whether their customers actually made a single cent in profit. They need you to be anxious, they need you to be active, and they need you to feel like you are failing unless you are constantly making moves. This is not a wealth-building system for you. It is a psychological extraction system designed to monetize your natural human fear. When you see a red number on your screen, your brain releases a hormone called cortisol. This is the same hormone your ancestors felt when they saw a predator on the savannah 50,000 years ago. In that moment, your instincts tell you to act immediately to save yourself from danger. But the stock market is not a lion or a snake. In the short term, markets are random and noisy. But in the long term, they are predictable and incredibly productive. When you act on short-term fear, you are essentially running away from a rustling bush that was only moved by the wind. You spend energy, you pay taxes, you generate fees, and you end up in a worse position than if you had just stayed still and done nothing. There is a famous internal study, often discussed at Fidelity Investments. They supposedly analyzed which of their millions of accounts performed best over a 20-year period. The winners were not the people with the best data or the fastest computers. The highest returns belonged to the people who were dead. The second place went to the people who had simply forgotten they had an account in the first place. This highlights the most counterintuitive lesson in all of finance. Your inactivity is actually your greatest competitive advantage. Vanguard conducted a massive study of 5 million accounts during the financial crisis of 2008. They found that investors who made 0 trades during the entire crash had average returns of over 18% over the following 5 years. In contrast, those who traded more than 10 times during that same period saw negative 3.4% returns. The difference for a $200,000 portfolio was nearly $200,000 in lost growth over just half a decade. The lazy investors earned an extra house worth of money by literally forgetting their password. If you want to protect your future in 2026, you need to start treating your portfolio like a garden. If you plant seeds and then dig them up every morning to see if the roots are growing, the plants will die every single time. You have to trust the soil. You have to trust the rain. And most importantly, you have to leave it alone. Your neighbor who plants their seeds and then ignores them for 3 months will always have more food than you ever will. To succeed in this noisy world, you must first delete the brokerage apps from your phone. Studies show that people who can check their accounts instantly check them an average of 4 times per day. Every time you look, there is a 53% chance you will see a temporary loss that triggers an emotional reaction. If you only look once a year, the probability of seeing a gain is over 90%, which leads to better decisions and far less stress. Second, you must automate everything. Set up a recurring deposit into a boring, low-cost index fund that covers the total stock market. This removes the need for you to be smart or to time the market perfectly. Automation is the only effective antidote to human emotion. When the markets inevitably crash in the future, your system will keep buying shares at a huge discount without asking for your permission or your opinion. This is how true wealth is built. Not by being clever or catching a trend, but by being consistently boring. Many people worry that by not paying attention, they will miss out on the next big opportunity or the next legendary company. They want to find the next Amazon, the next NVIDIA, or the next breakthrough technology. But the data shows that missing just the 10 best trading days over several decades can cut your final wealth in half. And those 10 best days almost always happen right in the middle of a terrifying market crash, when everyone else is selling. If you are on the sidelines waiting for things to feel safe, you will miss the recovery every single time. The only way to capture the gains is to be there for the pain. And the easiest way to endure the pain is to not look at it at all. As we move further into this decade, the world will only get noisier and more chaotic. There will be new wars, new economic crises, and new reasons to be afraid of the future. The media will tell you that this time is different and that you need to take drastic action right now to survive. But remember the teacher who outperformed the Nobel winners. Remember the dead people who had the best returns. Your wealth is not a measure of how hard you work or how much information you consume. It is a measure of your patience and your ability to control your own biological instincts. In 2026, your greatest enemy is not the market. It is the person you see in the mirror every morning. If you have stayed with me this far, it shows you are ready to take a different path than the exhausted and anxious crowds. Please hit that like button if you found value in this perspective. Don't forget to subscribe and turn on the notifications so you can stay grounded in a world of financial chaos. Share this video with one friend who you know is stressed out about their investments right now. You might be the reason they finally find some peace of mind and secure their financial future. Investment success is not about being the most intelligent person in the room. It is about being the most disciplined and the most patient. The less you do, the more you make. It is a simple rule that is incredibly hard for our brains to follow. But it is the only one that truly works in the long run. Go spend your time on your career, your health, your hobbies, and your family. Let the compounding machine work silently in the background while you live your actual life. In the end, the goal of money is to buy you freedom, not to take it away by keeping you glued to a screen. Thank you for watching, and I look forward to reading your thoughts and your experiences in the comments below. Stay patient, stay disciplined, and I will see you in the next video.